Hello, and thank you for joining us today. I'm Taylor Combeluzier, a mining analyst at Red Cloud Securities. Today's webinar features Aeris Resources Limited. Aeris Resources is a mid-tier base and precious metals producer that has a portfolio that includes 3 operating assets and 1 development project, all located in Australia. The company has successfully extended the life of mine at its cornerstone Tritton copper operations, and its other operating asset is the Cracow gold operations. Production is currently wrapping up, or has wrapped up at the North Queensland copper operations, and then Aeris also owns the Stockman copper zinc project, an advanced development project 300 kilometers northeast of Melbourne. A DFS is expected for Stockman later this year, and it also has the Jaguar zinc and copper operations on care and maintenance. Today I have with me on the webinar André Labuschagne, who's the Executive Chairman at Aeris Resources. The format of today's webinar will be comprised of 2 parts. In the first, André will give you an update on Aeris, and then in the second, we'll take your questions live. So please send them in using the chat, and we'll get to as many as we can. I'll just run through the disclosures and then hand it over to André for the presentation. So for Aeris Resources, there may be some forward-looking statements made on this call. I would direct listeners to the cautionary note on page 2 of the corporate presentation located on the company's website. For Red Cloud Securities Inc., I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Aeris Resources specific disclosures. So with that out of the way, I'll hand it over to André to walk you through the update.
Thank you, Taylor, and thank you everyone for joining. I guess in these difficult or challenging times we see on the market, all I can say is we got copper and gold, and that's exempt from tariffs. But in the other side, where the markets are, that might present opportunities for investors. Just a little bit of Aeris, as Taylor just said. Currently, we're mining the Tritton copper mine in New South Wales. We also got the Cracow gold mine in Queensland. Both of those operations, Tritton do about 20 to 24,000 tons of copper. Cracow doing really well at around 45 to 50,000 ounces of gold. And then we had the North Queensland operations called Mount Colin. That finished off in February. And as part of cleaning up the business and focus on allocating capital where it belongs, we are busy running a process to sell what's left of the North Queensland assets. We also got the Jaguar copper zinc mine in Western Australia, which is under care and maintenance. Later this year, we'll come out with an update on a restart for Jaguar. And then the Stockman project was one of the projects we bought as a package about 2 years ago. Quite a large copper zinc mine or project. Feasibility studies underway, and we will work on a investment decision at some point in the next 12 months. As a group, we will produce between 27 and 32,000 tons of copper, around 55 to 60,000 ounces of gold, and 200,000 ounces of silver as a group. Every one of our mines, each one of the mines at specifically Tritton and Cracow, has got significant exploration upside. And we'll talk a bit more of the news flow in the last 2 weeks, specifically at Tritton. Just reminding you, all our numbers is Australian dollars, and our financial years runs from July to June. So the first 6 months for us was quite a strong 6 months compared to the previous year. Cash flow operations at $58 million. Our guidance is around 40 to 48,000 tons of copper equivalent production. There's $40 million of debt which is drawn, and we closed December with $26 million of cash and liquidity of $43 million. If you compare that to the previous 6 months or 12 months, we literally made nearly more money the first 6 months than we made in the full year in FY24. One of the key things we're working towards, and it's a clear strategy we've developed, is we want to focus this business on copper and work on how do we get ourselves within the next 3 to 5 years to around 50,000 tons of copper metal, plus then the gold and silver and everything else which goes with it. With a clear strategy of using our portfolio of gold asset, which is Cracow. Cracow will generate good cash with these sort of gold prices we're seeing, and making sure that enables us to grow both at Tritton. Tritton has got some really exciting new projects coming online, but also the Jaguar and Stockman projects to restart. You can see there, the Jaguar copper equivalent grades of nearly 4% copper and Stockman at 3.6. Now, those are really good grades and should support the restart and the development of those projects. And once those studies are done, we will start to build those. And with those projects coming online, let's say in the next 3 to 5 years, you can clearly see that 50,000 ton target. As I said earlier, we're busy divesting. I get a lot of comments, you've got a lot happening. And in North Queensland, there is another mine which we can kick off, which is called Barbara, but we don't believe that's the right place to spend the capital for the business. So it's clearly the focus: simplify the business, use the gold to enable the copper strategy, and keep the focus on Tritton for at least the medium-term future to pick Tritton up. And you'll see in the slides coming up what is the Tritton potential. So getting into Tritton, that's in New South Wales. You can see in the region where there's a few other producers of copper and other base metals, but there's also quite a large tenement package for us. 2,300 square kilometers of ground. Currently, we're forecasting around 21,000 tons of copper production with gold and silver on top. And for us, it's about how do we keep improving and pushing Tritton to that 30,000 ton production profile as we move forward. One of the key executing strategies we're working on, we just started literally in February an open pit cutback. That will deliver about 1.3 million tons at 1.3% copper. It can potentially go all the way up to 1.8 million tons. One of the key plans or strategies for this is the waste from this cutback. As you can see, the pit there is there's old heap leach pads sitting around the old pit. The waste of this pit will close those pads and in itself will save us about $8 million on rehabilitation costs. So Tritton typically will mine 2 to 3 mines at any time. It's got a 1.8 million ton process facility. So this pit will start to push that capacity of the plant over the next 12 to 18 months. Now with this then goes, what's the next project which we're working on? And this is Constellation. Constellation is the new discovery. We discovered it about 3 years ago. Last week, we've updated the mineral resource. We've done a drilling campaign, and most of that is now an indicated level. And you can see there's already 7.6 million tons at 2% copper and good gold grades. Now, that was a significant increase, a 26% increase on the previous results. But the biggest impact has been that most of this is now indicated. So all that green in that slide you see is indicated level. And we're now working on a feasibility study to actually bring this into a reserve position. The model which we will follow to develop this mine. So the whole idea is you're going to finish the Murrumbidgee pit and take the same contractor straight into the Constellation pit and start that off. So that was really positive news for us. But the biggest positive part of all of this is what's highlighted there. So you can see the supergene and primary ore can go to their process plant. The oxides will do a small heap leach with. But you're going to have 3.2 million tons of resource at nearly 2.5% copper going into your process plant. And that in itself is nearly 3 to 4 years of 1 million tons per annum of 2.5% copper. So the pathway for us to get to that 30,000 tonne, as I talked about earlier, is we will kick it off with a small open pit mine, taking out the oxides, 1.5 million tonnes at 0.6, and then you go into the supergene, which is only 50 meters below surface. You'll get 3.2 million tonne feed to your process plant. Now, 1 million tonnes at 2.5% copper is already 25,000 tonnes, and then you've got the underground mines, and then once you're in the open pit, you'll start to work on the underground, and there's already nearly 3 million tonnes sitting there at over 2% copper. So a clear plan for us is this is the next big baseload feed for the Tritton plant, and that combined with the current mines called Avoca Tank and Budgerygar will see us delivering that 30,000 tonne production profile for quite a long time as we move forward. Then, of course, there's other exploration potential. So just to give you a bit more of a feel for it. So at Tritton, that's where we've got the process plant, and we're mining 2 deposits there, the Tritton mine and Budgerygar. We're also mining Avoca Tank, which is a small, high-grade underground mine. And then Constellation is coming up as the next big development for us. And between those 4 assets, you will keep that mill at around 1.8 million tonnes. And then future project is project called Cracow and Budgery. That will become future feed as these mines are mined out. That said, though, all these deposits continue at depth. Tritton is already 1.2 kilometers deep and still going, and Avoca Tank and Budgerygar is new, basically new mines we started off 2 years ago. So significant life still there as an opportunity. At Cracow, this is our gold mine. Once again, a very neat, tidy plant, and has been very well looked after. It's just one of those mines which never had a long reserve life, but has continually produced and continued to extend. When we bought this mine 5 years ago, we had 2 years in reserves, and we knew that there's further extensions. And now 5 years ago, we're in the exact same position where there's 2 years, 18 months of 2 years in reserves and future extensions. So we're managing it to around 40 to 50,000 ounces of gold, and at this gold price, it will generate $40 to $50 million of free cash as a mine, which is that discussion we had earlier. It's how we fund the growth of the copper plans as we move forward. On the exploration side, all the production has come out historically out of this Western Vein field and a little bit out of Golden Plateau, but that was way back. The 2 key areas or big fair potential extensions of a big discovery sits in this Western Frontier, is a new structure which we discovered a few months ago, and the known Southern Vein field, which you can see that 2.5 million ounces already mined, trending south. And in the next 12 months, we will start to test the Southern Vein field to really see if you discover something there, you potentially have discovered a whole new structure. And that's a key focus for really turning this gold business into a longer life reserve, is going to be focusing on those two areas within the exploration portfolio. On the development projects, that's a photo of our Jaguar portal in Western Australia. You can see they're very different, not as green as Queensland. The key there is when we put this mine into care and maintenance, we were mining down the bottom of the Bentley mine, as you can see in that image. At the time, zinc price dropped by 30%. We had some ground condition challenges as we were mining into new areas, and we had to spend capital to get to this big new deposit called Turbo, and we made the decision that this mine is running inefficient. We just bought it literally 12 months after we bought it. We will reassess our options. There's 3 other deposits which can be mined as well. There's Jaguar, Tritton, and Triumph. and we're going to come up with a new restart plan. It needs new investment. It needs improvement in the ventilation. It needs Paceful to manage the geotech or the ground conditions, and that's part of the feasibility study we're working on for a restart, which will include those items, and then we'll come up with a restart plan. What is quite interesting here is as well, although this is base metals, we've got very strong copper deposits or copper exploration targets, both north and south on our tenement package, basically right next to two gold miners. So there is an option play there for us to look at gold exploration and use the gold miners around us to monetize those assets. At Stockman, as I said, this is one of the reasons why we bought this business, which included the Jaguar mine, Stockman, and the North Queensland assets 2.5 years ago, was for this project. It's a large 12-year reserve life plan currently on it. There's multiple deposits, but the feasibility study just used the one deposit as a base. The work we're currently doing, we finished the feasibility study. We bought only at recoveries of 70 and 75% for copper and zinc. Now, in this market, you need to get those up. Very early in the due diligence process, we identified new technology to improve those recoveries. So the Albion process is a technology which has been used around the world, which the first round of test work has shown we can get those recoveries up to 95%. We're doing a new round of test work across the ore body to finish off the capital cost and associated operating costs with the Albion process, and then a redesign of the plant with that in the background. And we're expecting to have those results within the next 2 to 3 months, with a study update towards July, specifically on Stockman. A really good project with those sort of grades, as I showed you earlier, 3.6% copper equivalent grades. You feel that a deposit sitting pretty close to surface should make good money as you develop these mines. The North Queensland assets, we mined the Mount Colin mine, which is finished. We basically put all of this up for sale, which includes all the tenements, both north and south of Cloncurry in near Mount Isa, and we're running a process on, and that's all part of simplifying the business and use the allocation of capital appropriately for long life assets and not just short life returns. I guess that's sort of the summary. We are forecasting that sort of 40 to 48,000 copper equivalent production. We've got 3 growth projects, all exciting, focus on copper, and then that 1.3 million tons of copper equivalent resource across those three mines is how we see us developing that strategy to get to 50,000 tons of copper. And while that you use the gold as the opportunity to develop those strategies. I think that's sort of the summary, Taylor.
Perfect. Thank you very much, André. So now we'll turn to the Q&A portion of the webinar. And just a reminder to everybody on the line that you can type in your questions at any point. So we've had one that came in right away. With regards to financing, are you looking for financing, and what style potentially could you be open to? Equity, debt, royalty, JV, etc.
So look, it's a pretty wide question. We are currently in a process to refinance our environmental bonds. Now that process is coming to a point within the next few weeks. That is all part of, in Australia, you need to have cash or guarantee facilities for your bonding. So we're in the process of doing that. And then right now, with the gold price, a copper price where they are, and the forecast of the business, as part of that refinancing, we'll see how we structure that. On a joint ventures, we, for example, something like Stockman, will be a big capital project, but that's 2 or 3 years down the line in my view. But we've always said that we're willing to JV or bring in partners to help to develop that project, because you're talking there about $400 to $500 million project. But for the rest, the focus right now is on refinancing those environmental bonds.
Okay, perfect. So maybe just in terms of, from your perspective, from the business, what is your outlook or the business outlook in terms of the copper market and where copper prices are? And, obviously there's some, it's driven up by some of the tariffs, and it's coming off a little bit, from the run up for the rush to get metal to the US. So there's a bit of a disconnect between the COMEX and the LME prices, but overall still like healthy levels, even when it's come off.
Look, my answer last week would have been very different to today, I guess. It's a bit unknown, but with copper and gold not under the tariff discussion, really, the drive for renewable energy is still going to be there, and China is getting stronger and stronger in those areas all the time. So I still believe the copper, even today's copper prices, for us in Australian dollars, the Aussie is sitting at 59 cents. We're still looking at very healthy copper prices. So, I think the copper price where it sits today is a strong price. I still have a view that the renewables and EVs are still going to drive copper in the future, and we should see a further upturn. But in this market where we are now, I think a lot of things is getting sidelined, and people are focused on the challenge right now ahead of them more than the commodity prices.
Okay. Okay, and then maybe just on Stockman, how is the economic study progress going? Is it on track? Is there any hurdles that could come up between now and when it's expected to come out, or how are things looking?
Look, it is on track in terms of the current test work and the results from the test work. The approval processes are continuing as per normal, but we need to finish the test work to ensure that we know what's going to be the flow sheet. We've engaged a consulting group a while back, and they've actually identified a few other opportunities which might even be better than the Albion process. It's just one of those projects. It needs something to get those recoveries up. You can claim 3.6% copper equivalent, but you only recover 70%. It's not good enough. So there is various work streams running to see what is the best alternate position as well. But no, it is the test work currently right now is going to plan, but there might be a bit more work on what's other options. Right.
Okay. So that you'll basically fine tune until you find the right option.
That's right. You see, the reason why it's still there, it needs a fine grind to get the maximum recoveries, and so you're either going to fine grind and cost you a lot of money, because that costs a lot of money, or you find technology which in these days which can give you the recoveries without having to do that ultra fine grind, and that's sort of the reason why we keep on looking at alternative options.
Right. Okay. And then I guess once just looking down the road, what kind of timeline is there between kind of having those final economics and making an investment decision? Maybe not securing the financing per se, but just from a corporate perspective.
I would say probably another 12 months.
Okay.
It's sort of, I think, where we sit.
Okay. Okay, I'll put out another call for questions from the audience. If you have any, just use the chat and put them in. I guess maybe just in terms of what's going on right now on the ground, you've got obviously a front row seat to the industry in Australia. What's activity looking like on the M&A front, and is there any smaller operations that are being picked up by bigger guys? Any consolidation that you're seeing down there? Has there been any moves really?
Look, they haven't seen a lot of moves. I still believe, the opportunities are there for consolidation. If you look in the Australian mid-cap copper producing market, there's not a lot of us around. And we always said that growing a business through multiple assets, acquisitions, and M&A is our target. So, for us, 5 years ago, we had one mine. Then we bought Cracow, it was two, and then we did the Round Oak transaction, and that grew the business to where we are today. But in the Tritton region, there's quite a few good exploration companies which we believe were stranded assets, which for Tritton is basically the biggest copper mill in the region, and has got capacity to take more in, especially if it's good quality projects. So for us, that is one of the growth opportunities specifically around Tritton. And then it's about how you grow the business with getting better quality assets. So we need to do the assessment of Jag and Stockman and make sure they are better assets or they got, long life, 8+ years mine life, and it can be stable. If you can bring those into production within your group, that's the growth, but also you compare the cost of that versus the cost of doing M&A sometimes, and what you can get is part of the work which we'll always do. So we've always been out there looking and are looking, but clearly for us, there's enough internal growth opportunities to keep the focus, specifically for Tritton. If you can get Tritton to plus 30,000 tons of copper metal through the development of Constellation and potentially start to see the improvement with the Murray open pit, that's a significant stepping stone for us to keep doing the growth plans for both Jag and Stockman. And if not, the other opportunity, of course, is always M&A.
Right. Okay, perfect. I'm not seeing any other questions that have come in. So maybe if you've got, just if you could sum up with the key catalysts in the next 6 to 12 months and kind of the main things investors should be watching for in the kind of near term here.
So the next 6 months, I guess the key takeaways is going to be the Constellation feasibility study update, because that really drives the Tritton life of mine plan with a strong reserve back plan for 3 to 5 years plus then the extensions. I think that is one of the catalysts. The refinancing of the current bonding facility and the associated plans to get the capital structure to work, and then the Jaguar study update on what's the way forward for Jag, and then Stockman when that comes out. But those are the key process would be Stockman, Jag, Constellation, Jaguar mine, Stockman, in terms of updates to the market and the value drivers for those assets.
Okay, perfect. All right, I think we'll wrap up there. So thank you very much, André, for presenting the update for Aeris Resources and taking the time today to host the webinar with us. And thank you to everybody on the line for tuning in today.
Thank you, everyone. Appreciate it.